Welcome to the Deep Dive. Today we're digging into BLS International's FY25 financials. We've got their investor presentation right here.
Yep, and the official stock exchange announcement. Our goal is pretty straightforward. Cut through the noise and give you the key takeaways on their performance, especially comparing this past year, FY25 to FY24.
Exactly. So you can quickly get a sense of their financial health and where they might be headed.
Okay, let's jump right in. Revenue first.
Sounds good. So for the full year, FY25 revenue hit Rs. 2,193.3 crores.
Which is a 31% increase from FY24's Rs, 1,676.8 crores. Pretty solid growth there.
Definitely. And Q4 specifically looked even stronger, relatively speaking. Rs 692.8 crores.
Yeah, that's a 55% jump compared to Q4 of FY24.
Wow. And it's worth noting some of this boost comes from acquisitions they made.
Right, like iData. That certainly played a part alongside their organic growth. Adds to their reach.
Okay, let's shift to profitability. EBITDA.
Big numbers here, too. FY25 EBITDA reached Rs 629.3 crores.
Which is a huge 82% leap from the Rs 345.7 crores in FY24.
And look at the margin. That jumped, too. From 20.6% in FY24
up to 28.7% in FY25. That's, what, an 8.08 percentage point expansion? That's significant.
Very significant. Q4 shows a similar story. EBITDA up 93% year-on-year, and the margin climbed to 25.1%.
And they put this down to a few things, right? Like cost optimization.
Cost optimization, yes.
Yeah.
And moving to a self-managed model for some operations, plus integrating those new businesses they bought. Seems like it paid off.
That efficiency seems to flow down to the bottom line, too. Profit after tax, or PAT.
Yep. FY25 PT was our Rs 539.6 crores. That's up 66% from FY24.
And the PDT margin also improved, hitting 24.6%. Q4 PT also saw a nice 70% increase.
What's really quite impressive is how they funded their acquisitions.
Yeah. They spent over 1,000 crores on buying iData, Citizenship Invest, and Ada Fidelis in FY25.
Exactly, and they did that mostly using their own cash flow internal accruals.
And despite that significant spending,
they still ended the year with a net cash position of Rs 928 crores. That's a strong balance sheet. Shows real financial muscle.
Okay, let's break down performance by segment. How did the visa and consular business do?
Right, their core business. Revenue from operations there was Rs 1,653.3 crores in FY25.
Up 21% from the previous year?
But the net revenue really jumped up 77% to Rs 1,089.1 crores.
Wow, okay. And EBITDA?
Even better, up 90% to Rs 569.7 crores. That pushed the EBITDA margin in that segment way up to 34.5%.
So much more profitable within their main business line. Likely more applications and getting more revenue per application.
Seems like it. Now, the digital business also grew its top line significantly.
Right. Revenue from operations, there was 540 crores, up 71%.
Yep. EBITDA grew too, by 32% to Rs 59.7 crores.
But the margin dipped slightly, to 11.0% from 14.3%.
It did. The presentation links that dip to the ASPL acquisition impact, but overall still solid growth driven by more transactions.
Taking a slightly longer view, looking back a few years.
Yeah, the historical trend is pretty clear. Consistent growth in revenue, EBITDA, and PAT from FY21 right through to FY25.
And that EBITDA margin story is quite something, climbing from, 12.6% back in FY22?
All the way to 28.7% in FY25. Shows a real focus on improving profitability over time.
Plus, their net worth keeps climbing, and as we mentioned, that strong net cash position.
And the key ratios reflect this too. Return on capital employed, ROCE, steadily rising.
Okay.
Hit 22% in FY25.
And return on equity, ROE, looking very healthy at 31.2%. Suggests they're using capital effectively for shareholders.
Definitely strong indicators there.
So summing it all up, FY25 looks like a banner year for BLS International. Strong top-line growth, impressive profit increases, much better margins.
And a solid cash pile, even after making some significant strategic buys. Growth across both main business areas.
It really paints a positive picture based on these FY25 numbers.
It does. Which brings us to the forward-looking part.
Okay.
Considering their strategy bidding aggressively, expanding services, geographic reach, plus these recent acquisitions, it makes you wonder, how are they positioning themselves for what's next in global travel and digital services? And on the flip side, what potential roadblocks could they hit trying to keep this kind of growth going?
Absolutely. Food for thought for anyone tracking the company.
Indeed.
Okay, that's our deep dive for today. Don't forget to subscribe and tap the bell icon to stay updated on the Indian stock market.